Ladies and gentlemen, welcome back to the channel. If AMC stock can be green today, then nothing is going to stop an AMC's way from giving us the mother of all short squeezes. Now, I do want to go over a little bit more of the charts here in this video. The charts specifically with AMC, as well as a couple other charts here for the broader markets. Just how ugly things truly are out there. It's almost record-breaking, okay? So I do want to give you guys an overall assessment on where I think we are with AMC. When do I think AMC stock could go through this multi-100% rally that I've been talking about for the last couple of weeks now, since even before this recent downturn started in the markets? The first thing that I will say to that point is, even though we've seen move down in the broader markets, AMC stock has been trading sideways throughout all of it. I mean, you've come down a little bit from your little rally here from $11.34-ish to about $9.38. But off of the lows that you've seen back here in September, I mean, you're still up about $2 from $7.30 per share to $9.39 per share where you are right now. So we are getting a slight recovery here as I am giving you guys this video. I do want to give you an update on the Middle East as well, and how I'm thinking about this conflict, as well as some stuff about interest rates. We're going to go over a lot here in this video. So hit the like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. So I think that is something that we might want to start with here first, because let's not be political. Being political in your investment ideology makes you $0, okay? Whether it's a Democrat or Republican, whether they are doing a good job or a bad job, does not help you make money. But we got to acknowledge a simple fact here, and I've shared this before with you guys many of times. But if you are a president, right, and you're going to seek re-election, if the economy is not doing well, you're not going to get reelected. Pretty much. Like a 90% chance you're not going to get reelected according to its statistical, preferences, right? Going off of GDP and recessions, there's only been one president who has ever won a reelection if there was a recession within 2 years of the election. But in this moment in time, it's very strange. Like we went over in the last video, your GDP reports today came in fine. Your, basically the economy is running red hot, but yet people are not feeling that. You might not think the economy is doing so well right now because your dollar has just been eroded away due to inflation. It's rough out there. Now, this article says Biden hails hot GDP report, but voters don't see the rosy picture. Wall Street does. And this is important when it comes down to interest rates. It says nearly half, 49% of the poll respondents said Republicans do a better job on the economy, compared to 28% who said Democrats do. Independent voters in the poll favored Republicans' handling of economic issues by a striking figure, 25 percentage points. So if you're an independent, you like how Republicans run the government. It says the poll also found that a majority of voters disapproved of Biden's economic track record, 59% to 37% approving. Why? Okay, this really makes me angry. Why do people disapprove? It's not because they give a crap about who's sending money where or what we're funding or any of that. Nobody gives a crap about that when it comes down to it, as far as their votes. What people really vote on, it's not economic policies. Again, it's not who's getting what and where. It's how are you doing? How is your pocketbook and your bank statement looking? That's what people vote on. 37% approval rating, that's rough on economic measures. You're not going to win re-election with that. Now, there is time to turn it around if you are young Biden. And the only way, and I mean the only way you are getting reelected, he knows this. Come on, it's not politics here. He knows this. Is if you get rate cuts and people start to feel a lot wealthier. People start to feel like their dollar is able to support them. That's it. So there's going to be a lot of pressure starting 2024 to get some serious rate cuts going. Janet Yellen even talked about this a little bit in regards to the deficit and why yields on your longer term duration are going higher, and she said it's because mostly the economy is doing well, and then you have the higher for longer. And then she was asked about the deficits and how the deficits could grow to 2% of the GDP over the next couple of years. And she said, well, people think rates are going to be higher for longer. They might not be. So she kind of threw a little bone to the markets, I do think, with that statement. So when rates do fall, well, obviously, small mid-cap stocks, those are the stocks that are hurt the most during, times where the Fed is raising rates, especially small cap stocks. When the Fed does cut rates, you're going to see an epic rally of small caps. And you've actually already started to see a little bit more resilience in your small caps. The Nasdaq's down over 1% today. The Russell 2000 is up 0.60%. Markets are forward-looking. Markets are sitting here saying, hey, if we're not going to get any more rate cuts or rate hikes, the next step is rate cuts. That's good for small and mid-cap stocks. And that's 100% correct. Like I said in the last video as well, if you're looking at the historical valuation of small caps compared to big tech or large cap companies, your S&P 500, your small cap stocks are trading at way lower valuations than your large cap stocks, which historically does not happen over the past, 20 or so years in modern time. And that's because, small cap stocks have higher valuations. They grow into their valuation. Small cap company could grow 50, 100%, and Apple's not going to grow 50 or 100%. I mean, imagine if that happened. Stocks markets would go crazy on an index level. But that's exactly it. The index has done well the past, year or so. Small cap stocks have not. Mid cap stocks have not done well. And that is what could be about to turn around, at least in my personal opinion. Now, there's a couple different things that are going on. One of them I think is very encouraging. We got good economic data today. Good GDP report, good durable goods orders, good data. Good data is still good data. And I think people forget that. That's good. That's exactly what you want to see. What's even better is TLT is getting bought today. Your long duration bonds are getting bought today. That's what you want to see. TLT is up 1.5% at the time of recording this video. If you take a look at your 30-year Treasury yields, they're down almost 11 basis points today. 10-year Treasury yields are down to about 4.85%, 4.84% to be exact, down almost 11 basis points today. This is really, 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 really good news for small cap stocks and for something like AMC. It can help support a rally more in AMC. Now, take a look at this chart. This is the S&P 500 equal weight. Out of equal weight stocks, about 10% of equal weight stocks, just any stock out there, is above their 20-day moving average. 10%. Stocks that are above their 15-day moving average is sitting at 10%. Just rough numbers here. Terrible numbers here. Your 200-day moving average on your equal weighted stock is 21%. That is rough. Okay, that is really, really, really bad. You're trading basically at your October lows as far as stocks that are above their 200-day moving average. That means an epic bounce should be coming here. Now, question is, does that bounce hold up? Does it sustain? Do we fall back lower? I think a lot of that has to do with the Middle East crisis, how the Fed meeting does go next week, how Amazon earnings hash out here in after hours, as well as Apple earnings next week. Those four things are going to be important. In my opinion, let me just give you my opinion on this Middle East situation. Once you actually get that invasion from Israel, it's probably going to be a bullish thing for the markets because the markets can handle bad news. We can't handle uncertainty. And what you've seen is a lot of uncertainty. Who's getting involved? What's going to be, come as an outcome to all of this situation. Now, Hamas just put out a statement to Associated Press that said they're really surprised by the lack of involvement Hezbollah has had in this conflict. Of course, they don't want to suffer the same fate as Hamas. Iran doesn't want to suffer that same fate as well. If they truly had nothing to do with this and did not coordinate, well, that's the problem. Or that's maybe the good. When you get this invasion from Israel, that's when Iran that's when someone else is more likely to get involved. But let me sit here and ask you, strategically speaking, do you have a better statistical probability of success before the US gets ready or after? What I mean by that is the US has asked Israel to delay this invasion, to get weapons in the area, to get more of their ships in the area, to get weapon defense, missile defense systems in the area. If you are any competent military figure, you know you're probably going to have a higher rate of success if you wait until, or if you act sooner rather than later. Don't let the US get ready, because then you're just screwed either way you're screwed. But you let the US get ready, you're going to have a much harder obstacle on your hands. So nothing is happening. I don't think anything is going to happen. Strategically speaking, that makes no sense to wait until the US is ready for an attack to attack. That just don't make any sense. So I think this might just be fear that comes and passes, like the Ukraine-Russia situation. I could be wrong. Things could hit the fan. Obviously, that would be negative for our markets. But as of right now, I'm getting more bullish, financially speaking, on this situation. And I think that is something that you guys should know. Now, the Fed, I do think the Fed is going to take a lot more dovish stance on this, pressure from just people, pressure from the government. You know, behind the scenes, the Biden administration's like, dude, people are the data's saying this, but people are not feeling it. People are not doing well. You're really hurting my ratings over here, guy. And there will start to be some pressure on potentially cutting rates, or at least being a little bit more dovish in that speech. So that's just kind of my opinion. There's no data really to support that, but that's just what I think. And again, this is the last flush out, I think, of big tech, trillion-plus-dollar companies to get those stocks to reset, and then you will see the rebound from the markets, right? Everything will start to actually do well. Your small, your mid-cap stocks. Now, AMC, some stocks like an AMC are probably going to do a lot better than obviously your average small mid-cap stock, especially your big tech stock. This next year is going to be the year of portfolio recoveries, of gaining ground on the losses that you have seen, in my personal opinion. And I do think AMC is set up for really good things here in the next 3 to 6 months or so. I think it's almost a given. Now, let's take a look at the charts. If you're taking a look here at the NASDAQ is sitting at about 34 on the RSI. Anytime you really get down here, you typically bounce. You can fall a little bit more, but you typically bounce right at about this level. And the NASDAQ is only down about 1% now heading into the end of the day. You've basically recovered over 50% of your low. This is a Wyckoff candle. That means that the sellers started up here, they drove down the price, and then the buyers came in, saved the day around this demand zone, around this 200-day moving average, and boom, pushed the stock back up, higher into the close. A Wyckoff candle is a big sign of potentially a bullish reversal, right? The last Wyckoff candle you got was right here. Same thing. Sellers drove it down, got bought back up again, and then boom, you went through that rally. Same thing back here. Wyckoff, sellers pushed it down, buyers pushed it up. Next day, sellers tried, they got rejected, did not have enough selling pressure. Buyers came in the next day, you were up 2%. Okay, these Wyckoff candles almost always lead to more upside. So I do think for now, the downside might be done. Now, Amazon earnings, Apple earnings, the Fed, data even coming out tomorrow, all of that will be important. But I do think at this stage, it's all about the rates. The rates, the treasury yields. Those are what is important right now for markets. And when you're seeing 10-year treasury yields down 10 basis points, 30-year treasury yields down 10 basis points on a hotter than expected economic data, well, who knows what's going on anymore? Who knows? Why are rates coming down? I don't know. Maybe the market's expected too much. I couldn't tell you, but I can tell you it's great news that this is happening. And there could be other things at play as well. Maybe there is a little bit of fear out there due to this Middle East conflict situation. All in all, I can't find anything not to like. in small mid-cap stocks right now. That means AMC stock is probably going much higher from here. Big tech stocks, you want to stay away from them with a 10-foot pole. That means the index level could come down a little bit more. That's actually what I'm expecting. Small and mid-cap stocks, they're in a very, very good position. Now, core PC price index month over month comes out tomorrow as well. You're expecting 0.3%. 0.3%, that's okay. That's 3.6% annualized. It's not great. If you come in at 0.2%, that is 2.4% annualized. That is great news. This could help continue to drive yields lower. That would be really good news, especially if you got a similar reading as last month at 0.1% tomorrow. Yeah, small mid-cap stocks, they are going to soar. Now, your personal income month over month, this doesn't matter all too much. Honestly, the higher, the better, just to get people feeling better and maybe spending some more money. 0.4% is your estimate. Last month was also 0.4%. Personal spending month over month is expected at 0.5%. Last month's reading was 0.4%. This, I think, is a little bit more important because spending and personal consumption is around 70% of GDP. You're talking restaurants, you're talking buying that new purse, that computer, school supplies, whatever it is, personal consumption, personal spending, 70% of the GDP, that's what it comes from. So if you're seeing a slowdown in personal spending, that's not going to be great. GDP numbers can be influenced by deficits, by reserves, by inventory, all kinds of stuff. So it's a little arbitrage to just look at the GDP report. Personal spending is directly related to the consumer. It takes out all of that other stuff, so that will be a big one to be watching. If that comes in weak, bond yields are going to fall even more. Stocks are going to make their way higher. Now, again, Amazon's going to be important here in after hours. That's going to be a big story for tomorrow. Now, in terms of AMC stock, we already went over the Ortec status, so not too much is actually changed there. Good news is today you're above your 8-day moving average. That is fantastic news. Your 8-day moving average at $9.34 per share. AMC stock is at $9.46 per share. This can lead you to your next major moving average, which is that 50-day moving average at $11.23 per share. So I'm here to report some very good news for all of you guys here in this video. And the RSI is at 44.55, which does support maybe we can go higher here. It's not like it's overbought. It's more so on the oversold side than anything. And the MACD throughout all of these headwinds in the markets is still positive. The yellow line above the blue line is a very, very good sign. Better than not. So there you have it, guys. You do have as well, last thing is the option activity for tomorrow. It could be important if, again, you do see yields come down, stocks go higher, small mid-cap stocks, AMC could way outperform 5-10%. Could be on the table for tomorrow. You're looking at calls in the money of 12,124, calls out the money of 86,000, puts in the money 9,000, puts out the money 34,000. I'm bullish on AMC right now. There's no other way to put it. I don't think AMC's falling from here unless the broader markets fall, unless we have some kind of problem on our hands. I think you are through the worst of it. That's just my personal opinion. So let me know what you guys think about all of this information down below in the comment section. Hit the like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. You guys have a great rest of your day, and I will see you in the next one.